Is artificial intelligence going to take over most business analysis tasks? Big tech stocks were selling off as investors were nervous at plans to splurge a combined $660 billion this year on artificial intelligence infrastructure, not so convinced on the payback narrative. Yesterday saw the tech-heavy Nasdaq index down by 1.59%, while the S&P 500 also was lower by 1.23%. Cryptocurrencies not doing so well as the price of Bitcoin sank 13%, reaching its lowest point since October 2024 amid a broader tech stock sell-off. Software stocks extended their fall after Anthropic, an artificial intelligence firm, unveiled the updated version Claude model, which analyzes financial data and completes many other business tasks better than the competition. Anthropic had earlier this week sent share prices of legal software providers lower after launching its AI tool for legal work. Some have asked if business analysis videocasts like this will vanish with AI providing the information most people need to get by. My answer is yes and no. I have often found AI useful for confirming implications of data releases, a kind of second opinion, and AI is certainly useful for speeding up clerical tasks like proofreading, correction of grammar, and spelling errors. If you want to get started on a topic you have little or no idea about, then AI is the way to go. But be sure it will always give you a C-level paper if scored by a professor, which is fine given that you would have scored an E or even an F. Insights from AI always came across as pedestrian if I sought for ideas after I had done a lot of my own research in an area that I was much more familiar. But AI looked brilliant in an area I knew almost nothing. So you get it, AI will not produce very deep analysis. Some of the data could need updating and there are errors. But you can always get average or slightly above the average insights if that will suffice. Sometimes AI is useless. I tried to use AI to do the SEO, that is search engine optimization, for my script. They did my keyword and hashtag research and optimization to increase the quality and quantity of website traffic. I got very little improvements on views. AI can at best make the dull sound better, but it will never make you the expert on a subject for which you have not put in the work, nor will it give that extra, the hallmark of analysis worth listening and learning from. In other related developments on the impact of AI on professional services, KPMG, one of the world's largest auditors of public and private companies, negotiated lower fees from its own accountant by arguing that AI will make it cheaper to do the work. Firms are investing in AI to speed up the planning of audits and automate routine tasks, but it remains unclear to what extent savings can be passed to clients. In short, using a message co-pilot, for example, implies you have to work harder and think more outside the box, seeing beyond the curve. AI can be used as a tool to sharpen your insights and to reduce costs of analysis. While I do agree that AI is showing up everywhere, it will, however, not be doing everything, at least not yet. But let me know what you think. Hello, this is Global Business Insights, where we look at the world from a business perspective and bring you news, views, and analysis that helps to navigate the somewhat turbulent context. Latest data showed that Germany's industrial sector activity fell sharply in December as industrial output in the Eurozone's economic powerhouse dropped by 1.9% over the month. This compared with the expected 0.3% decline and a 0.2% growth recorded in November. UK house prices bounced back in January in a sign of demand may be coming back. Halifax said the average price of a home increased 0.7% to a fresh all-time high of £300,077. This more than reverses the previous month's 0.6% drop. The increase was also the fastest rise since November 2024, adding to evidence that the property market is turning a corner after a difficult 2025 in which buyers held back purchases after Chancellor Reeve's November budget unveiled higher taxes and a new levy on homes valued above £2 million. Rio Tinto and Glencore are calling off a merger valued at over $260 billion, which could have led to the world's largest mining company and a giant in the copper industry. Both sides could not reach a deal which gives enough value to shareholders. Argentina has also introduced a comprehensive incentive regime for large mining investments, and Glencore is planning to invest $14 billion in the copper project El Pachon and Mara. That's in the country in Argentina. Copper is hot given its use in electrification, expected to see strong future demand. Trump has launched a government website, Trump RX, pointing customers to discounted medicines. Still on healthcare, Novo Nordisk is taking Hims and Hers, a telehealth company, to court for selling a cheaper version of its Wegovy weight loss pill. Novo Nordisk also argued that Hims pill contains an untested compound version of Wegovy's active ingredient. Hims and Hers jolted the industry with its $49 a month introductory price for its weight loss pill. And in Indonesia, international investors balked at a Moody's downgrade of the country's credit rating outlook. This was after Southeast Asia's largest economy saw an $80 billion rout of its equity market last week, and markets were also unimpressed at President Prabowo Subianto's attempt to ramp up Indonesia's growth to 8% amid concerns over policy uncertainty, a widening fiscal deficit, and central bank independence. India's central bank kept its policy rates unchanged at 5.25%. The economy is forecast to grow at 7.4% in the fiscal year ending March 2026 after overtaking Japan. India is also set to become the third largest economy by 2030, surpassing Germany. Are we likely to see the major central banks diverging in terms of monetary decisions this year? Australia raised interest rates for the first time in 2 years this week, while others adopt a more cautious approach. We saw the European Central Bank and Bank of England yesterday holding rates constant. The US Federal Reserve also, in an earlier decision, left its benchmark rates unchanged, hinting that we could have a long wait before any further cuts. In the US, traders are fully pricing in one more 25 basis points cut by July. Also in the US, Trump's nominee to replace Jerome Powell as Fed Chair Kevin Walsh has called for rate cuts and a smaller balance sheet. For the Bank of England, it was an unexpectedly narrow 5-4 vote, as the bank argued more easing was likely if wage growth somewhat abates. For the European Central Bank, traders are not expecting any rate changes soon, as analysts watch the trajectory of inflation and economic growth. The Bank of Japan had warned that a weak yen was feeding price pressures as the apex bank lifted rates in December to their highest in 30 years and then paused in January. Looking to Africa, last week, Ghana's central bank slashed its main interest rate by 250 basis points to 15.5%, the lowest level in 4 years and below most economists' expectation. Also, last Thursday, the South Africa Reserve Bank kept its benchmark rate unchanged at 6.75% after a 25 basis point cut in November. The next meeting of the Nigeria Central Bank Rate Setting Committee is on Monday 23rd and Tuesday 24th of February 2026. This allows time for another inflation read after yet another normalization procedure took the inflation rate to 15.2%. Most analysts expect lower inflation in the January data and for the Apex Bank to resume its easing. South Africa said today that its trade minister had agreed a framework economic partnership agreement on a visit to China, also a step towards securing duty-free access to the Chinese market for South African exports. Africa's biggest economy wants to boost exports amid a tariff row with the United States, its second largest bilateral trading partner after China. South Africa, Cape Town, wants to more than double municipal rates on homes that are rented out for short durations, including those listed on Airbnb and Booking.com, as a boom in private tourist accommodation drives up prices. South Africa will introduce a bylaw in the coming months to ensure properties used primarily for short-term lets pay commercial tariffs on par with hotels and guest houses. About 26,500 housing units in Cape Town are listed in that category on Airbnb, more than double the number in Barcelona, Amsterdam, New York, and Hong Kong. The rise in short lets has also stoked some resentment among overwhelmed locals. Central Bank of Nigeria's composite PMI for January 2026 reached 55.7 points, showing a 14th consecutive month of expansion. Growth was reflected across various sectors, with the industry sector posting a PMI of 56 points, services sector 54.5 points, and agriculture at 54.2 points. Analysts have, however, observed that while the Stanbic IBTC S&P Nigeria PMI has been declining steadily in the last 4 months, with January 2026 slipping slightly into contraction, the central bank's Purchasing Managers Index, that's PMI, has been going up, with January in expansion. Still on Africa, United States President Trump extended a 26-year-old free trade agreement with African countries after months of uncertainty over the future of the deal. The extension of the African Growth and Opportunity Act will last until December 31. The U.S. Senate reduced the tenure from the initial 3 years passed by the House of Representatives last month. The U.S. Trade Office also said the agreement would be modified to account for U.S. imposed tariffs as part of the administration's America First policy. Meanwhile, African manufacturers warned that a 1-year extension of AGOA only offers just temporary respite as the market needs longer-term certainty. U.S. crude futures inched up slightly but still on track for their first weekly drop in 7 weeks as investors focused on the outcome of US-Iran nuclear talks. Oil prices recently benefited from the geopolitical mayhem perceived to be brewing as Brent crude futures rose to $67.8 a barrel in early morning trade today. A lot of nervousness hurting tech stocks globally. Asia markets were mostly lower, tracking the tech-led rout on Wall Street. The South Korea's Kospi plunged as much as 5% at one point as index heavyweights Samsung Electronics and SK Hynix fell 0.44% and 0.36% respectively, while Hyundai Motor was 4.3% lower. Well, that's it on this special edition of Global Business Insights. This is Bode Oshosami. Please do not forget to subscribe and hit the notification button. Thanks for watching. Bye-bye.